Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended April 8th, 2015, we saw widespread outflows in the mutual funds industry, but a little bit of inflows into the ETF side of things. Let's take a look at our mutual fund asset classes and see where the activity was. As you can see, equity ETFs had about $900 million in outflows this week. Taxable bond funds had a very small $400 million inflows. Municipal debt funds endured a second week of outflows, about $100 million this week, and money market funds batted cleanup with about $5.4 billion in net outflows. Well, it was a pretty good week for equities. We saw the Dow Jones up 4 out of 5 trading days. We saw a few points of gain on the market, but that still wasn't enough to entice mutual fund investors to get into the market. Let's take a look at the activity of those equity mutual funds. Despite a poor jobs report with about 126,000 jobs created in March, it tended to shock the market, but it was still just 1 month out of several that have been very, very good. That caused investors to pull back the reins on their activity this week. We saw domestic equity funds lead the outflow parade. About $1.8 billion were removed. Non-domestic got people's attention with about $900 million in inflows. All the activity, all the eyes are on Europe right now as things might start to heat up as their quantitative easing program gets underway. But let's not forget, for mutual funds, the European region group is a very small one. We saw limited activity there. I don't expect to see mutual fund investors starting to get in line to reallocate into Europe-specific funds. Looks like they're going to let their managers do that. Overall, we saw the best activity into international multi-cap core funds, which had about $570 million in net inflows. Emerging markets also had pretty good activity. They saw inflows of about $451 million. Large cap growth fund, the big outflow this week, about $559 million leaving their pockets. Well, let's turn our attention now to equity ETFs. As I said earlier, they did attract some money this week, about $156 million in net inflows. It tended to be more of a risk-on week for the ETF market. We saw surprising leadership, though, from the Deutsche MSCI EFA ETF, which is DBEF. They're at the top. They had about $1 billion in inflows. This fund has come out of nowhere to start asserting some leadership in the market. We also saw a lot of activity from Vanguard Group, where some of their ETF share classes have been either at the top or the bottom of flows activity. We're not quite sure what's going on there because we haven't seen them there before. But this week we saw the Vanguard Midcap Index with about $549 million in net inflows. At the bottom, a lot of dividend players were seeing outflows. Certainly at the very bottom, SPY saw outflows of over $5 billion. Well, let's look now at taxable mutual funds. Again, they had about $400 million of inflows this week. Solid performance in the market. Again, more of a risk-on move, as we saw with equity ETFs. The core funds area, the core plus bond funds area saw $1 billion in net inflows. They seem to be on track this week. High yield funds also did surprisingly well, about $537 million. Now recall, high yield funds and equity mutual funds tend to follow the same path, but this time they diverged. Loan participation funds actually saw a fairly light outflows this week, following last week's light outflows. $111 million pulled for them. They might start turning a corner here pretty soon. One group to mention also is the short investment grade group. They saw outflows of over $1.3 billion, as I believe investors may be trying to turn away from that short end of the yield curve because it's gotten beaten up so much lately. It might be allocating more towards the intermediate and long end of the yield curve instead. Well, let's not forget about taxable bond ETFs. They also saw inflows this week. About $2.7 billion was a good mark for them. This was their best week in over 2 months. So investors are really starting to get interested in what the ETF side can do for their fixed income portfolios. Again, as I mentioned earlier, lots of Vanguard moves here, taking up number 1 spots at the top and down at the bottom as well for outflow activity. Their benchmark, a BND product, which is the Vanguard Total Bond Market index fund had inflows of over $1 billion this week. At the other end, we saw some of their international total market product with leading the outflow charge. In the middle, of course, we saw high yield such as HYG and JNK almost tie with about $400 million in inflows. I'm sorry, about $340 million in inflows each. So another good week for junk bond ETFs. We'll take a look now at the municipal debt side of things. Muni mutual funds, easy for me to say, had their second week of outflows as the market remained rather soft. We saw a lot of issuance in Q1 as states and municipalities saw interest rates weren't going anywhere. They tended to flood the market very strongly with paper in the first quarter. So I sense there's a little bit of indigestion in the market right now. Maybe advisors are asking their clients to back out of muni funds for a little while until things get back under control. High yield muni funds led inflows, about $93 million in inflows this week. Very little single state activity this week, almost zeros across the board. So it looks like muni investors are starting to just let things cool off for a while before they start to get back into it, which I think they will. The final group to take a look at is money market funds. They had $5.4 billion in net outflows. The retail side saw over $500 million in inflows. The institutional side, on the other hand, had about $6 billion in outflows. Interesting divergence here on the institutional side, where the institutional government category had outflows of $11 billion. The institutional prime had inflows of $6 billion. And that's going in the opposite direction that a lot of people figured things would go as money market reform makes its way through the market. So we'll see if this activity is just a contrarian view by some of those institutions or if this is just a temporary phenomenon. So please join us again next week where we will dissect the flows from mutual funds and ETFs. And certainly join us online at any time at lipperusfundflows.com. Thanks for watching.